Biggest question most people ask is like, how do syndications and funds make their money? Right. And we're talking about being a syndication, like in a syndication, whether you're syndicating a real estate deal, you're a syndicator, or you're a private equity real estate guy like me, where you have a fund and you raise money to be able to buy deals or invest money in these deals with your partners, and you send them money every month. So there's fees, guys. Look, wake up. There's fees in everything. So a lot of people are like, oh, they're overcharged for fees. They're feeding people to death. They're taking advantage of the little guy. They're not. You're investing in a deal and there's fees associated with that. So I'm going to go through my fees, where Bell Capital stands. Like, how does Bell Capital make money as a fund, as a syndicator, all of that stuff. And I'm going to explain them to you. And if you want to see them, like the benefit of being in a fund or a syndication is disclosure. You cannot do a deal without disclosing to people all of this is a private placement memorandum, as well as the operating agreement, as well as the subscription agreement, everything you need to know about the deal, the business plan, how we're going to do it, all of it. But go to bell-capital.com. You can register there. You can take a look at these documents. They're there. We're totally transparent. How do you raise money? Full transparency. Tell everybody what you're doing and then let them decide whether they should do it or not. But today, fees. How does Bell Capital make its money from a company side, right? Not the deal, but, and I'm just going right off of this, right off of where we are, which are management fees and other compensations. I wrote them down here and I'll go over a little bit of a comparison so you get a real understanding about what some people are complaining about. So even if you're not going to invest, you're a passive investor, you're just wondering, I want to educate you on this. So we charge 1% of an acquisition fee. 1%. So let's say we buy a deal for $80 million. We take a acquisition fee for putting the deal together, finding the deal, driving the deal, doing all the work, managing all the people, negotiating all the fees, negotiating the interest, negotiating the debt. We charge 1% for that. So on an $80 million deal, yes, we will get $800,000 at closing. Now, I take a portion of any acquisition fee I get and I roll it back into my deal. So let's just use that example. On a $80 million deal, and we get a 1% acquisition fee of $800,000, I'm gonna probably take 300 grand and I'm gonna roll it back into the deal as an investor. So that way I'm aligned with my investors if I haven't put my own money in. Now, bear in mind, I started the company. I filed like all this right here. It costs money to raise money, guys. You can't just go off and be like, I'm gonna raise a bunch of people. I'm gonna raise money from the public, from my investors, whatever. You got to file with the SEC. You got to pay for an attorney. You got to do all the work. And oh, by the way, you got to know what you're doing. You already have to have the experience. So there's a cost. It's not free, right? Depending on how much you're going to raise, it can range anywhere from, if you're get a good attorney, 15,000, and I think on a Reg A fund, it can go all the way to 100,000 and cost up to 300,000 to do it. So just so you know, it costs to raise money. So for anybody to go, oh man, if you made $800,000 on an $80 million deal, that's a lot of money. It's not a lot of money, man. It's going to cost. I'm going to reinvest some of it, but that's our acquisition fee. And on an asset management fee, it's not a property management fee. There's a property manager, right? Or a company that specifically does that. There's going to be another 1%, right? So that's 1% of the, for this specific fund, for my first fund, the way that we did it, it's 1% of the gross collected rent. That's not a lot of money. So it would be different if I had like a $50 million fund. We rate, well, on a $50 million fund, yeah, 1% of $50 million, that makes more sense, right? 500 grand. But it's not if you're looking at the gross collected rent of an asset. If we only have one asset on this in this deal, and let's say it collects 200 units, 2,000, 4,000. Let's say, I don't know, 4 million bucks. 1% of 4 million bucks, 400 grand divided into that month. Now, bear in mind, I have a team. I got to pay my investor relations people, my acquisitions team, my internal accountants, CPAs, legal, all that stuff. So it isn't just like, oh, you're getting all this free money. It's not. And the deal has to still pay my investors. So like this right here is a cost of doing business. It's not the real estate. This is running the business. This is a business, guys. And then later when we sell, that's another 1%. So let's say we bought an $80 million deal, we put down 40 million and we sold that property for let's say we double the 40. Hypothetically, just stick with me on this worst case scenario, and we sold it for 120 million. I would get 1% of that, right? Another $1.2 million. But I might have been in that deal for 10 years. paying my team, paying my people, doing all this stuff. And I've taken the bulk of the risk because, again, my investors are not signing on the loan. People forget this. You're investing money, but somebody else is signing on the loan. Probably loans most people can't go get on their own. Whether it's me, whether it's a piece of my acquisition team, or whatever the case may be, like we're going to go get financing and then we're going to sell this property. We've managed it for you. We found it. We've dealt with the tenants, the toilets, the termites, all the headaches, the evictions between the management companies, all the legal stuff, all the complaints. You never get any of this stuff. And oh, by the way, we only charge 1% of that. So I'm going to be working on something. I'm going to show you guys some price comparison here in a minute. All right. And here's the deal. Let's say we don't sell. Because, my biggest thing here is I've done this in other deals. We've actually bought a property. We've raised the income or the value of that property. Then we turned around and we refinanced the property. At the refinance, the loan amount in this fund, the way that we structured is 1%. Okay. So we did we have a 1% fee, and that's here. If you guys go to the private placement, it says it right here, 1%. So fee paid out at the time of refinance. Now, this is a compensation to the manager for its effort in securing the refinance loan on the property. So let's say we've been in a deal for 7 years and I've raised the rent. Now, my goal, if I were to do that, is to refinance and give you all of your initial investment back. I'm signing on the loan. So now you have no more money in the deal. I keep you in the deal. And in exchange for doing that, I charge a 1% refinance. Now, if we were to do something like that, bear in mind, I'm taking on more debt for no return of that because I'm going to still be in the deal. Let's say I refinance the property, pay you guys back. My new debt is for another 5 years on that loan. Now I'm on the hook for full-blown debt for 5 more years, and I'm giving you all your money back, and I'm sending you cash flow every month. So for me to get 1% of the actual loan amount taken out for compensation for doing that, that's not a small thing to do. Right. So I know other people are like, oh, man, I don't think that's fair. Then go do this yourself. This is not a free ride. There's a lot of work that goes into finding these deals, putting a team together, making sure it gets done, making sure the debt gets paid on time, insurance, what else? The taxes are if we're going to do a deal, maybe dispute the tax. All these other things need to happen for everybody, all the investors to be done. So for a lot of people that take a look at syndicators and fund managers and they complain about fees and they're charging these fees and why do we have to do that and blah, 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 blah. Dude, there's a cost to doing this business. And I'll be honest with you, this is nothing. I'm giving you examples of like an $80 million deal with a refinance and a resell at a higher price. Some of these deals, man, they're big deals, but a lot of people do small deals. I know dudes that only do deals for like 5 million bucks. They might get, 50 grand. They might get 50 grand at closing, but they're going to be stuck doing a bunch of work in that deal for like 5 years in hopes to cash out or 3 years or whatever. That's not a lot of money. And they got to run the team. But we're doing this because we're like, hey, this allows more people to get access to these deals. But as a business, from being a fund manager or syndicator, these are just transparency for fun for these deals. And again, like I said, it's here. It's in Minds. You can go there. You can just go there and look. Manager fees and other compensations. Expense reimbursement. This is a one-time startup and incidental thereafter. If I started the fund, usually what will happen is I get my initial investment back for starting the fund, the paperwork, the legal expenses, and all that stuff. So I charge for that, right? So I get that back. The acquisition fee I told you about. It's a one-time fee per property. This is compensated to the manager for its efforts in organizing the company, conducting due diligence on the property, and making this investment opportunity available to investors. It's all right here. The problem is people look at it from the outside and go, oh, they're making a ton of money off fees. These are compensations backwards for doing that. Asset management fee monthly. Compensation to the manager or its affiliates for their effort in managing the properties. This is not property management. This is asset management. This is us managing the management company, making sure that they hit their management targets, increasing, handling the things that they got to do. All right. A refinance fee. This is paid out at the time of refinance. Compensation to the manager for its efforts in securing a refinance loan on the property. And then the disposition fee, one-time fee per property. Compensation to the manager or managers upon the sale of the property. It's 1%. So all of this stuff is here. Unfortunately, a lot of people like to hide this stuff and act like there's I'm going to tell them at the time. Dude, just tell them now. It just makes more sense. This is normal. This is just a normal business practice. If you run a business, you want to be compensated. If you're a realtor, everyone knows that you're going to Get paid 6%, 6%, 3%, whatever you're going to do. If you're a loan officer, everybody knows you're going to put a 1% or a quarter of a percent or a half a percent, 2% loan fee in there. Everyone already understands that. But for some reason, people will watch social media and all these other things of people telling them, oh, they're going to hammer you with fees. Yeah, there's a fee to run a business. If you don't want us to actually have a business associated to manage your asset, to manage your capital with the asset that we did, then go do this yourself. But if you do this yourself, you're going to still be doing the same thing. And let me tell you, you're not going to make any money in the front. This is a 10-year run. This is one time. Boom, we did a deal. We got, let's say, 880 $80 million. That 800 grand, that's a one-time deal. Plus, I'm going to refi. I'm gonna actually invest a portion of that fee in there from my side. I'm getting no compensation. The rest of it goes to my team to run the operations and to keep things going. Over 10 years, asset management fee, not a lot of money, right? That's going to come, but that's also got to that's got to pay for the fund, pay for the stuff, pay for my team, pay for the office, keep operations going, pay for the systems that you can go into the site, into the portal, keep all these things done on this specific deal. And then later, when we sell or not, there's a 1% fee on the purchase, on the actual sale price, because we're going to have to do that too. I learned this the hard way. If you're just watching, I sold a property, small property. We sold a small portfolio in Hawaii. After we sold the property, I didn't know this. Most people don't know this. A month into the sale of that property, I was still working in transit to help the new owners that purchased the property transition management from tenants to leases to keys, showing up, still taking phone calls long after that deal was already done. And we had already made our money. Because I was the operator on the deal, it wasn't a fund at the time, I was a partner. I was still involved in the transaction. A lot of people don't want to talk about that. I still have the tenants from that property that we sold because they knew me, right? Because I was managing the management company, I was overseeing it. Still reach out to me and talk to me. So if you think that you aren't gonna, like, the person that is involved doing the work is getting compensated on the business operations, not the investment side, that still happens. Period. That is a cost of doing this business. Don't cry for me. We made a lot of money on the deal. But what I'm saying is there's still work to be involved. So all you people out there that are like, oh yeah, I don't want to pay these fees. Don't pay them. Go do your own stuff. But what I'm saying is if you're going to invest in a fund or a syndication, there are fees. So do not cry later when you're like, oh, I didn't know about these fees. I'd like to help more people and just be transparent. Boom. It's right there. You want to know where the money's going? Here's where it's going. You want to know where our fees are? Boom. Let's go over it now.